Good morning. Welcome to ATI Pro Media live at 9 o'clock. Well, we got past a couple big days here this week. Unfortunately, your markets are a little red on the screen. Not a great overnight after the tariff announcement. Liberation Day. We got the Liberation Day hangover here on Thursday. So we'll roll through your grain markets. Got a few headlines here. We'll talk about export sales, EIA report yesterday, updated drought monitor. Going to talk cattle markets as well. Appreciate y'all joining me today. Want to know what you think. Is all the bad news getting baked into this market? Where do you think we go from here? All right, let's roll through your markets. I'll give you an update and we'll roll through some headlines here. May corn down 3 cents at 4.54. New crop D's corn down 3 cents, 4.45 and 3/4. May beans down 19 at 10.10 and a half. Nove beans 10.18 down 19 and a quarter. Soy oil is $1.82 weaker at 47.14. Soy meal is a tick firmer, up 70 cents, 295.30, still below 300. Looking over at your wheat markets, we got Chicago wheat down a nickel, 534 and a half. May KC wheat is unchanged. Looking at new crop KC wheat up 1/4 cent at 580. Over in your meat markets, we got feeders down $3. Oh no. April at 285.82 half. And out in your live cattle, we got fats down 217 in your April contract 250 lower in your June contract, 204.95. Hog markets leaking weaker as well. April's unchanged, but May is down 0.725 and June is down $1.30. Your crude market's down $4.98, $66.74 a barrel. Diesel's down 14 cents. Look at those cash diesel bids out there, your local cash diesel market. Nat gas is up 14 cents at 4.19. Your equity markets, things are getting real rough over there. The Dow's down 1,420 points, 41,068. The S&P down 209 at 5,500 even. The Nasdaq's down 795 points, down at 18,960. The Russell's 100 points weaker. The Bitcoin is down 5,000 at 82,000. Gold's 50 points weaker at 3,086. Silver's down, and the dollar is 2.24 weaker at 101.25. So, wow, what a lot of movement there on your markets here out of the gate. Gapped lower. We had that press conference at the Rose Garden at 4 Eastern, 3 Central. And as we rolled out and unveiled the tariffs, the market started sliding on your equity markets. And then when we opened on the grain markets, we gapped lower, and we kind of bounced back out of the gate, but it's looking like it's on the lower end here again too as well. So tariffs go into effect. Trade war 2.0, it's on, it's happening. Markets are reacting to the announcements. Soybeans taking a big hit. I think they're down as much, 3 times more than corn, which, we got a record soybean crop in South America, and they're positioned to fulfill near-term supply needs already. But soybeans are sagging. U.S. corn, from a corn front, though, U.S. is still in pretty good position. Pretty much the only game in town until we get that safrinha corn crop going, but that's not going to come online until July, August timeframe. So U.S. corn's positioned well if importers need the grain. So I don't know, though. A lot of bad news getting baked into your markets, and the guys got to wonder how much worse can it get? And is there a U.S. government put out there as well to bail farmers out if things continue to get worse? We had MFP and CARES packages on the last trade war. I wouldn't count on it, but it's something worth considering about. And we've seen comments from Trump and Brooke Rollins about having some packages in place if things get worse comes to worse. So when it comes to tariffs, though, 10% across the board for all exporters to the U.S., but there's some additional duties on 60 nations. There's some graphics out there. I didn't feel like I'd throw them up there and throw them at you, but there's some graphics out there that illustrate what these are as you break them down across those different nations. But 60 different nations with a little higher duties on. From what I've gathered, the tariffs will take effect midnight on Saturday. And some of those higher duty nations, they'll go into effect next Wednesday at April 9th at 12:01 a.m. So Canada and Mexico, though, one of the big ones, biggest trading partners with the U.S., they're already facing the 25% tariffs tied to the drug trafficking, fentanyl, illegal immigration stuff, and those will remain in place. And there's no additional tariff on them until those go away. So, and then there was a statement in there about USMCA compliant goods being exempt while non-compliance. So, not quite got my head wrapped around what all that means, but we got tariffs on Canada, Mexico for the fentanyl and illegal immigration stuff. Those stay in effect, but there's some USMCA stuff that is exempt. I don't know, little gray area there maybe, but regardless, your markets aren't really liking that. Mexico's a huge trading partner and big buyer of U.S. corn, so keep your eyes on that. It's I don't know, we alluded to it as well though earlier. We talk about it. It's finally here, and the market sells off. We can't act surprised when the market sells off in this environment. Reminds me of that Feb Outlook acreage when they printed a 94. We knew there was going to be a lot of corn acres, but when we finally printed it, it finally happened. We got more sellers than we do buyers, and that's kind of the theme right now. So fund longs are running for the exit. Shorts are entering the market. We got more sellers than buyers. Sentiment has swung. When will it swing back the other way? Will something change between now and Saturday? Will people come to the table and renegotiate, or will we see a phase 2 trade deal come into play here? But I don't know. It's bigger than grains right now. I think there's bigger pieces at play regarding the larger macro market, but it's definitely going to impact our ag markets here in the short term. Hopefully, in the long run, things get to a better spot. So, all right, I'm going to take a sip of coffee, and then we'll move on to weekly export sales, which were solid across the board here today. Got a graphic here. I'm going to pull that in, click the button. I covered up that shot there. Weekly export sales solid for corn, solid for beans, solid for wheat, really firm actually for wheat, 12.5 million bushels versus 3.7 a week ago. So a nice print there on old crop wheat. Even out there in the new crop wheat, 3.5 million bushels on the new crop wheat sales too. So good to see across the board there. Soybean oil was a little lighter when you look at this sale. This weekly export sales on the light side. They had a big number last week. Soybean oil pulling back there. A marketing year low, though, for soybean meal. Very disappointing on the meal side of things, falling below the bottom end side of that trade range. Marketing year low for 25. Decent week on cotton, though. When you look at the cotton weekly export sales on cotton, 129.1 1,000 running bales there. But good week on cotton. Meats, they're not on this list, but we had decent week for beef exports, and really stellar pork exports when you look at the weekly export number there. 53,000 metric tons, which is a marketing year high. Mexico and China, the biggest buyers on the pork side of things for weekly export sales there. Big week in pork exports. South Korea, Japan, and Mexico were the big buyers on your corn front. So, all right, on to the next thing. Ethanol, we had the EIA data yesterday, and run rates production was pretty solid for the ethanol production rates. It was down 1% versus a year ago, but beat expectations, and the stocks were below expectations. So kind of a supportive number on the stock side of things. Exports on ethanol exports were down from recent levels, though. So here's a quick snapshot of your production. Got the production side on the left-hand side. We're still above that 1 million barrels per day. And on the fuel, the ending stock side, see that tightening up and rolling over. But seasonally, this is a high point of the year on ethanol ending stocks. Supplies there hopefully start to pull those stocks out and get people out driving. We've talked about it over the past few weeks. Need to watch those ending stocks levels here on those weekly EIA reports. So, all right. Drought monitor map as well. We had that out. We're transitioning as we digest the tariff news. We're going to transition more into weather as well. We're always searching for that next headline, something to talk about, and weather is an easy one here this time of year, as we got an important safrinha corn crop growing in South America, which is trending a little drier on the forecast there, near to slightly below normal precip for a lot of the safrinha corn over the next few weeks. Watch and pay attention to your safrinha corn forecast in South America going forward. But let's look at the U.S. updated drought monitor here. We've got this week on the left and a year ago on the right. The Western High Plains continues to be, an area of focus, and then that Texas area as well. Had some change here as we look at the 4-week change. Iowa, Eastern Nebraska, seeing some some improvements there on the drought front, and but some degradation there in my country, Southwest Kansas, South Central Kansas, and then even in the Texas area too. So, look at the past 30 days of percent of normal and it hides that wetness there in the northern Iowa, southern Minnesota, and eastern South Dakota area. But hit and miss there. A lot of red there in Texas and your Southwest Plains, my country here. So, yeah. Another stat, T-storm weather. Got another fun weather stat for you that I jotted down. Thought it was interesting. 60% of U.S. corn production wetter than normal the last 30 days. So, fixing that drought. You can fix a drought pretty quick. Seems like we're always one day away from fixing a drought. We're also, we'll talk planting delays in the east and drought in the west. That story is going to be entering the scene pretty quickly. But on the cattle front, clicking over to cattle, we had futures had a strong day yesterday. Contract high settlements for April through October contracts, and some of those contracts making new contract highs even. Feeders made new highs in the September and beyond, those deferred contracts out there. We had choice cutout leaking weaker, down 232 at 339.90. Still has been on a heck of a tear over the last few weeks. Still $1.60 firmer versus a week ago. The chuck and the round, they are holding their ground. But the rib and the loin, they are doing the heavy work on the cutout to lift that cutout higher. That helps packer margins and helps them more aggressively want to go out and pay premiums for the cattle in the feed yard. So cash is yet to develop this week at the feed yard, but asking prices are $2 firmer, and trade is called steady this week. We'll see what actually transpires here. Maybe we'll get a little cash trade here today. Definitely probably see some more tomorrow, but the index gained a little ground as well and bounced back 0.25 points higher, 291.27. We'll see if we can make a new high later here this week. Cash feeder levels, they're just hot out there, and it's a good time if you're it's a good time to be bullish and opportunistic, but it's also a good time to manage risk when you got record prices out there. So LRP, if you're interested in it for unborn calves, your grass cattle that you're running this summer, next year's calf crop, hit us up, talk about it. We'll run that commercial real quick here, but good opportunity to go out there. Great foundational risk management tool. If you already have LRP in place too, I've been working really hard with existing customers to button up and tighten up, protect more equity in the LRP that they maybe bought a month ago, 2 months ago, at lower levels. If we're seeing that market move higher and grind higher, there's more dollars to protect out there. How can we go out and protect those dollars? So it's good to be in a bullish position and button up that coverage when you can, when the market presents the opportunity to do so, because we don't know how long it's going to last. But fundamentals are there for it to last for a while, but we're giving some back here today. And how long is this trade war gonna last, and what are the impacts on the beef front? You can take a number of different angles and approach to, is it bullish for beef? But at some point, if we have less lean imports because we have tariffs on Australia, meat coming in, jacks the price up of beef products. Are we going to have less exported pork that's going to be cheaper, or less exported chicken prices? What on the protein complex? How's that all balance out? And what can the consumer actually take and pay for going forward? That might outweigh any bullish fundamentals out there and cause this market to not stay as good for quite as long as you think it should. And that is what hurts you and makes you have a bad day. So protect yourself from having a bad day. Are any comments and questions out there? We'll dive into some of those. And May cotton limit down. October isn't far off either. Yeah, good comment, Luke. I don't like to talk about that. We don't like to talk about limit down when it happens. And I don't always quote up cotton. It's at the bottom of my board. Maybe I need to move that up there. But yeah, May cotton down $3, 64.80 limit down, and those deferred contracts out there, 68 cents on Dees 25 cotton. So that's not going to buy any more acres. That is not going to buy any more acres out there. But taking the brunt of it, soybeans down 18 cents. Corn got front month May down a penny. So hanging in there on the corn side of things, and wheat is KC wheat's relatively unchanged, down 1/4 cent here, but feeder's still down 2.80, and your fat's down $2 on the meat side of things. We'll see how the day trades. We'll see what transpires the coming days as we, with the baseline tariffs going into effect Saturday and the higher rates going into effect next Wednesday. We'll see who comes to the table, does some negotiating, make some deals happen. It's make a deal season, I guess, over the coming weeks. We'll see how it all shakes out. And I got to ask, and I got to wonder how much bad news is built into your markets. Don't want to be a bear every day. And we certainly got some red on the screen today. I like to be a contrarian. How much bad news is built in these markets? And what's the next bearish thing that feeds the bears going forward today? Guys got to wonder. With that, appreciate y'all joining me today. I'm going to get out of here. We'll be back tomorrow. No April Fool's Day joke tomorrow. I do have a special guest tomorrow. Okay. You're going to want to tune into it. You're not going to want to miss it. It's no April Fool's joke. I am serious this time. We got a special guest tomorrow. Can't wait to have him or her on. Going to be surprised. Make sure you tune in live at 9 o'clock tomorrow. We'll see you then. I'm going to click the button and get out of here. Y'all have a great day.